1. This is a quick discussion of how to account for restricted funds. For restricted funds, my definition are grants. These have time or purpose restrictions on them, and you have reporting requirements. Designated donations have time and purpose restrictions. And endowments, only the income can be used. The principal generally has to remain unused, except under certain circumstances. Again, these are all restrictions placed on it by the donors. I would warn you that occasionally corporations will give you a grant. They refer to it as a grant. That is a verb. It is not a grant based on this definition. This is a worksheet that we use to track the restricted funds that are recorded in net assets. In my particular case, I've listed the grants across the top. I have the months remaining here. That's for my calculation purposes. And then as of the first of the year, and you'll notice I used 2025 so that no one thinks I'm using real numbers, I have put the remaining portion of the grants across the top of the restricted funds, I should say. The following line shows the money that has been removed from restrictions. They've satisfied the restrictions one way or the other, and therefore the funds are fully available to use. In most cases, that means that, for example, a grant, that the funds have been spent for the purpose designated, and therefore the funds are released. The rest of this worksheet identifies, the next line is a new grant has been received on 10/15, and then of course that adds a new column and a new set of calculations. And you can see that this particular grant had 10 months to go. It is reduced equally over that time period, and at the end of the year there are no more funds restricted because it has been completely transferred to unrestricted. Whereas here, this grant still has $108,000 left. This should be the net of the restrictions. So let's see how this works out on the net asset section. And of course, we record this with journal entries to identify it. Your total net assets is $375,000. I made that up, obviously. What we want to do is we want to allocate that between restricted and unrestricted. So in this case, at the beginning of the year, we have $204,000 in restricted funds. I've put that down here under donor restricted funds. The board has also restricted $5,000 in my example. So we have $209,000 at the beginning of the year that are restricted. And we can identify some of it is board, the rest of it is allocated here. In that case, we make a negative entry to $209,000. Thus, it allows us to allocate our money between restricted and unrestricted without changing the overall balance of the net equity or net asset accounts. Our next step is on 9/30, we make our entry to relieve the grants, or relieve them of restrictions. This totals up to $11,317. So I slide down here, and you can see that this number and this number are the same. We've reduced our net restrictions by $11,000. That shows up here. That changes this. It also changes our offset here. The total amount of equity does not change. This is simply a change in the allocation between restricted and unrestricted. No money is added. That's as of 9/30 and 9/30. Slide down a little further. On our 10/15, we have added a new grant. This changes our total net restricted to $392,000. Here it is, $392,000, which our total restricted is changed to $397,000. But we have also increased our net income by $200,000 because we've gotten grant income. In that case, we do in fact increase the net assets because we've received an additional inflow of income, which is recorded at the time the income is guaranteed. It's not necessarily the cash received. It could be a receivable, but that's the way it works. So now we have increased our total net assets by $200,000 to $575, and our allocation is $397 and $177. And this is all done with journal entries. Not sure what else to tell you here. That is my understanding of how this is going to work, or how this works. Thank you very much.